Gold is at an all-time high in 2026. Financial experts on television are telling every American to buy gold. Banks are recommending it. Social media is full of it, and yet Warren Buffett, the greatest investor in American history, refuses to buy a single ounce, not one. He has publicly called gold a poor investment. He has bet against it repeatedly, and he has been proven right every single time. Today, I'm going to show you exactly why. While millions of Americans rushed to buy gold during every financial crisis 2008, 2011, 2020, and now in 2026, Warren Buffett has consistently done the opposite. He has taken that same money and poured it into American businesses, dividend stocks, and index funds. And the results, over 50 years, are not even close. The gap between what gold has returned and what Buffett's strategy has returned is so large that most Americans simply cannot believe it when they see the numbers. In this video, I am going to show you exactly why Warren Buffett has never invested in gold, the 3 specific reasons he has given, backed by 50 years of real data. And at the end, I will show you what he buys instead, and why every ordinary American should consider doing the same. Stay until reason number 3, because that one will completely change how you think about gold forever. And I want to be clear before we start. This is not about saying gold is worthless. Gold has a role. But Warren Buffett's argument is that for ordinary Americans trying to build long-term wealth, gold is one of the worst places to put your money. And after 50 years of data, it is very hard to argue with him. Let's get into it. The real truth about gold from the man who knows more about investing than almost anyone alive. To understand Warren Buffett's argument against gold, you first need to understand what gold actually is as an investment. Gold has been used as a store of value for thousands of years. Ancient civilizations used it. Governments build their entire monetary systems around it. And today, in 2026, gold is still seen by millions of Americans as the ultimate safe haven, the thing you run to when everything else is falling apart. But Warren Buffett sees it very differently. Warren Buffett's core argument against gold is brutally simple. Gold just sits there. When you buy a stock, you own a piece of a real business that wakes up every morning trying to earn more money. When you buy a farm, it produces crops every year that you can sell. When you buy a rental property, it generates monthly rent checks. But when you buy gold, it does absolutely nothing. It sits in a vault. It produces no income. It creates no value. It simply waits for someone else to pay more for it than you did. Warren Buffett has made this argument most powerfully with what he calls the gold cube thought experiment. He calculated that all the gold ever mined in human history, if melted together, would form a cube approximately 68 feet on each side. At 2026 prices, that cube is worth approximately $10 trillion US dollars. Now, Buffett asks, what else could you buy with $10 trillion? You could buy all of the farmland in the United States, which produces hundreds of billions of dollars of food every single year, and still have enough left over to buy every share of Apple, Microsoft, and Amazon combined. So you have 2 choices. Choice 1, own that giant golden cube. It will sit there. It will not produce a single blade of wheat. It will not generate a single US dollar of income. 100 years from now, it will still just be a cube of gold. Choice to own all the farmland in America, plus the largest technology companies in human history. 100 years from now, those farms will have produced trillions of dollars of food. Those companies will have generated trillions of dollars in profits, and they will be worth dramatically more than they are today. Warren Buffett always chooses choice 2, and so should every American. Warren Buffett once described gold as a way of going long on fear. What he means is the price of gold goes up primarily when people are scared. Scared of inflation, scared of war, scared of financial collapse. Gold is essentially a bet that the world is going to get worse. And Warren Buffett has spent 65 years betting that America and the world is going to get better. That bet on human progress and American innovation has made him $130 billion US dollars. The fear bet has never come close. Reason number 1. Warren Buffett never invests in gold. Gold produces absolutely nothing. This is the foundation of his entire argument, and it is worth sitting with for a moment, because it is more powerful than it sounds. When you invest in anything, you are making a bet that it will be worth more in the future than it is today. But there are two very different ways an asset can become more valuable. It can produce value, or it can simply become more desirable to other buyers. When you own Coca-Cola stock, the company produces billions of US dollars in profit every single year. It manufactures beverages. It sells them in every country on earth. It grows its earnings over time, and it shares those earnings with shareholders through dividends. When you own Coca-Cola, you are a partner in a real business that is actively creating value every single day. Warren Buffett receives over $776 million US dollars per year in dividends from his Coca-Cola shares alone. Gold has never paid him a single cent. Think about what this means for ordinary Americans over long periods of time. If you invest $10,000 US dollars in a dividend-paying stock that grows at 8% per year and pays dividends that you reinvest after 30 years, you have approximately $100,000. Every year along the way, the company is producing real goods and services, creating real jobs, generating real profits, and sharing those profits with you. Now invest the same $10,000 in gold. Over the same 30 years, gold has returned approximately 3 to 4% per year on average. You end up with around $30,000 to $35,000. Less than a third of what the productive asset delivered. Here are the real numbers that most Americans never see. In 1974, you could buy gold at approximately $180 US dollars per ounce. If you had invested $10,000 in gold in 1974, you would have roughly 55 ounces. At today's 2026 price of approximately $2,400 per ounce, your gold would be worth $132,000 US dollars. That sounds impressive until you see the other side. The same $10,000 invested in the S&P 500 index in 1974, with dividends reinvested, would be worth approximately $2.4 million US dollars today. 2.4 million versus 132,000. That is the true cost of choosing gold over productive assets. Reason number 2, Warren Buffett never invests in gold. Gold runs entirely on fear, and fear is not a reliable investment thesis. Warren Buffett has built his entire philosophy on the opposite of fear, on optimism. On the belief that human beings are innovative, that American companies will continue to find ways to grow and create value, that the long arc of economic history bends toward progress. Gold bets against all of that, and for 65 years, Buffett's optimism has crushed gold's pessimism. Let's look at how gold performed during the 2008 financial crisis, which is when most Americans think gold proved its value. When the stock market crashed in 2008, gold did spike significantly. Fear was everywhere. Banks were failing. Americans were panicking. And gold went from approximately $800 per ounce to over $1,900 per ounce by 2011. Everyone who bought gold in 2008 felt like a genius for a while. But here is what happened next. By 2015, gold had fallen back to approximately $1,050 per ounce. Meanwhile, the S&P 500 had completely recovered from the 2008 crash by 2013 and had gone on to reach brand new all-time highs. The Americans who bought gold at the peak of the 2008 fear and held it spent years watching their investment stagnate while the stock market doubled and tripled around them. Fear peaked, and then, as it always does, it faded. And gold fell with it. Reason number 3, and this is the one that surprises most Americans. Gold is actually a poor inflation hedge. The most common argument for buying gold is that it protects you from inflation, that when the US dollar loses purchasing power, gold holds its value. It sounds logical, and it is partially true over very long time periods. But over the time periods, most Americans actually invest 10, 20, 30 years. Gold is a terrible inflation hedge compared to the alternatives. Here is the data. During the high inflation period of the 1970s and early 1980s in America, gold did perform well. But then inflation came under control and gold crashed by over 60% from its 1980 peak. It took gold over 20 years to recover to its 1980 high. Meanwhile, US stocks, through that same period of falling inflation, delivered extraordinary returns. Real estate appreciated dramatically, and dividend-paying American companies grew their earnings and their payouts faster than inflation every single year. Gold, over any meaningful time horizon, has consistently underperformed productive assets as an inflation hedge. Warren Buffett's real inflation hedge is simple. Own great American businesses. When inflation rises, companies raise their prices. Their revenues go up. Their earnings go up. Their dividends go up. A business like Coca-Cola, which sells billions of drinks every day, simply charges more per drink when inflation rises. The business grows through inflation, and so does its stock price and its dividend. That is a real inflation hedge, not a metal sitting silently in a vault hoping someone will pay more for it next year. Let me show you the full picture of why the gold mining industry itself illustrates Buffett's point perfectly. To get gold, you have to dig it out of the ground. That requires enormous amounts of energy, expensive equipment, thousands of workers, significant environmental impact. You spend all of this money and effort to dig a metal out of the ground only to put it in a vault where it sits and does nothing. Warren Buffett once said, "We dig it out of the ground in South Africa, ship it to New York, and then bury it again in Fort Knox." It makes no sense. So what does Warren Buffett buy instead of gold? He buys what he calls productive assets. Assets that wake up every morning creating value for the world. Farmland that grows food every season. Businesses that manufacture products people need every day. Technology companies that innovate and create entirely new industries. Insurance companies that collect premiums and invest them wisely. Every asset in Warren Buffett's portfolio is actively doing something, creating something, earning something every single day. Let's use Apple as the perfect example of why Buffett chooses productive assets over gold. Warren Buffett's Berkshire Hathaway owns approximately 5.6% of Apple, worth hundreds of billions of US dollars. Apple wakes up every morning designing and selling iPhones, iPads, MacBooks, and services to over 1 billion active users worldwide. Every year, Apple earns over $100 billion US dollars in profit. It pays Buffett hundreds of millions in dividends, and the company innovates, finding new ways to grow its earnings year after year. Gold has never once done anything remotely comparable. For ordinary Americans who want to follow Buffett's philosophy, the answer is straightforward. Instead of gold, buy a simple low-cost S&P 500 index fund like VOO or VTI. You immediately own a tiny piece of 500 of the most productive American companies in history: Apple, Microsoft, Amazon, Johnson & Johnson, all of them working every day to create value and grow their earnings. All of them paying you dividends that compound over time, and all of them historically delivering returns that have crushed gold over every meaningful time period. Warren Buffett has been making this argument for over 50 years, and the data has proved him right every single time. Gold has returned approximately 3 to 4% per year over the last 50 years. The S&P 500 has returned approximately 10 to 11% per year. The difference, compounded over decades, is not just better returns. It is the difference between a comfortable retirement and a life-changing fortune. For every American watching this, that difference matters enormously. Now, in the interest of being completely fair, let me tell you when gold might make sense for some Americans. If you are extremely worried about a complete collapse of the global financial system, gold could serve as a small insurance policy. Some financial advisors recommend keeping 5% or less of your portfolio in gold as a crisis hedge, not as a primary investment, not as a wealth-building strategy, but as a small insurance policy against truly catastrophic scenarios. Warren Buffett himself does not do this, but for very risk-averse Americans, a tiny gold position is not unreasonable. But for the vast majority of ordinary Americans trying to build wealth over 20, 30, or 40 years, the evidence is overwhelming. Follow Warren Buffett's approach. Open a Roth IRA at Fidelity, Vanguard, or Charles Schwab. Buy a simple low-cost S&P 500 index fund like VOO expense ratio of just 0.03%. Add high-quality dividend-paying stocks like Coca-Cola, Johnson & Johnson, or Procter & Gamble. Set up automatic monthly contributions. Reinvest all dividends automatically and let time and compound interest do what they always do. Let me leave you with one final comparison that puts everything in perspective. If you had invested $10,000 US dollars in gold 30 years ago, in 1996, at approximately $400 per ounce, your gold today would be worth approximately $60,000 US dollars, a 6 times return over 30 years. Now invest that same $10,000 in VOO, the S&P 500 index fund, in 1996. Today, with dividends reinvested, that investment would be worth approximately $200,000 US dollars, 6 times versus 20 times. Over the same 30 years, with the same $10,000. That is why Warren Buffett has never bought gold. Warren Buffett has always believed in one simple idea: bet on human progress. Bet on American innovation. Bet on productive businesses that create real value in the real world. Gold is a bet that the world is getting worse. Stocks are a bet that the world is getting better. For 65 years, Warren Buffett has bet on better, and the world has rewarded that bet with $130 billion US dollars. Every American has the same choice to make. What will you bet on? Let's bring it all together. Warren Buffett never invests in gold for 3 powerful reasons. Reason 1, gold produces absolutely nothing. No dividends, no earnings, no value creation. Reason 2, gold runs entirely on fear, and fear always fades. Reason 3, gold is a poor inflation hedge compared to productive American businesses. Instead, Buffett buys dividend stocks, index funds, and entire businesses that create real value every single day. And over 50 years of data, his approach has outperformed gold by an enormous margin. Here is my challenge to every American watching this. The next time someone tells you to buy gold, ask them one simple question: what does it produce? If they cannot answer that question, you have your answer. Drop a comment below and tell me, are you currently holding gold? Or are you following the Buffett approach with stocks and index funds? I read every single comment and will personally reply to as many as I can. Every good financial decision you make today, your future self will thank you for. The best time to start was yesterday. The second best time is right now. If this video helped you understand why Warren Buffett avoids gold, hit like and share it with one American who needs to hear this. And if you want to know why Warren Buffett still lives in a $31,500 house despite being worth $130 billion, that video is right here. See you there.